Good morning all, CamelbackTrading.org coming to you this Friday morning, January 29th, last trading day of the first month of the year. And boy, do we have a lot to talk about, so let's get right to it. So first and foremost, you're looking at the SPY ETF's market profile here on Window Trader. We have a lot of different factors coming into play today. We have balance rules coming into play, a two-day balance. Right now, we're right at the bottom of. We have gap rules coming into play, as if we don't go down much further, then gap rules will apply. We'll look to take a put. We have destinations that will far and wide apart. I know a lot of you might dismiss that, but it is so true. We said yesterday, upside and downside destinations are far and wide apart. Well, guess what? These algorithms have to search to get there. We have a chance for an outside week down, which would be pretty bearish for the SPY. We get any acceptance below this two-day balance, 50-day moving average is going to become an incredible magnet for the algorithms. Let's go to Russell. Now, here's a very interesting one. For those of you who have been shorting Russell for the last God knows how many months and getting crushed, well, keep an eye on tonight's video because I'm going to do a nice recap on all the charts, IWM, triple Qs, and SPY. And depending on where we close, you might finally have your opportunity to be right on a short. Right now, Russell, inside day yesterday, coming out of an inside day, possibly on a gap below an 8-day balance. It's pretty bearish for the short term, so keep that in mind for the Russell today as they open. Again, depending on the size of the gap. If the gap gets too big, I'd wait for some sort of inventory adjustment before I want to take the short play, or wait to B period to see if you start one-time framing down. That's something you know I like. Right now, the gap is about almost $2. It's a little bit too big for me to want to just jump on a short right away. Triple Qs. I said I was going to treat yesterday as an inside day, basically. Well, right now you're looking to come out of an inside day to the downside on a gap. Now, they had a 7-day balance. They dipped below it on Wednesday, came back, didn't fill the gap. I said yesterday in last night's video, if we take out Wednesday's low, this gap is probably going to fill rather easily. That's still something I'm expecting. And then you see if they get accepted firmly into this 5-day balance, where not only did they have a gap, they had a nice double distribution day. So A's high becomes very important from the 19th, around the 315 level, if they are to trade down there. Now, for SPY and ES, what happened yesterday? Quite simply, what's been played before affects what happens next. Traders will do what's worked till it doesn't work anymore. So what happened? Well, Wednesday, after basically consolidating a good part of the day after that large gap down, shorts pushed it down and pushed and pushed and pushed. And yesterday, those shorts in KLM and the overnight got taken to the woodshed as we opened and drove straight up and spent a good majority of the day above even the previous day's high and filled almost to the penny half the gap. But what happened in the afternoon? Well, the market got too long in FG, H, I, and J. They couldn't take back much any more of the gap, so the week longs finally decided up in J and K. And then what transpired after that? Well, the same game. Like I just said, they'll do what works till it doesn't work anymore. L and M are shorts pushing, pushing, pushing. And I said in last night's video, if we open below M's low, those shorts are going to be in really good shape and they will continue the game. Well, look where we are right now. We're looking below yesterday's low, possibly below the two-day balance low as they continue to push. So let's go over destinations and a game plan for this morning. Just want to make sure right now the pre-market low. Okay. So, on the upside, your first destination will be yesterday's low of 375.89. So the gap now is over 200 ticks. You know how I feel about that. Plus, you might be open right at the bottom of a two-day balance. I'm not saying, believe me, I'm not going to be a buyer down here, but I don't want to be a seller either just yet. I'd like to see some sort of inventory adjustment where the gap is maybe only $1, where my risk reward is a lot better. against yesterday's low. So upside 375.89. Then this is amazing. You talk about destinations far and wide. Then we don't have anything to the pre-market high or overnight high 378.35. And then guess what, folks? Yesterday's high of 381.93. Now, sure, B and M is going to be very important. So if we get into, if they do close the gap, we see what the reaction is at B and M's low. Any acceptance into M's range, we know how it generally acts. But as far as firm destinations, until we get more market-generated information, those upside ones are far and wide apart. Downside. Well, right now I'm going to use, did I write? I just want to make sure. What was Wednesday's low? Why do I have 372.01? Give me 1 second, because I might have missed Wednesday's low. No, that's it, 372.01. I apologize. So here it is down here. I'm looking at L's low. I apologize. So your next destination right now on the downside is the pre-market low of 372.31 and then 372.01. So again, look how mechanical your overnight low is right now, right above the bottom of a 2-day balance. Then below that, we don't have anything. We'll have the 50-day moving average, which is 370 and change, then 369.12, 368.05, and then right now, 364.82 would be a monthly low, which is this month's low, unless we really flush out, and then 362.03, another monthly low. So game plan for this morning. Okay. If the gap is $1 or less, I will take a put play, and I'll be out if the gap fills. If we then rally up to B and M's low, I will then take another short play to see if it gets rejected out of there. Those are 2 early put plays. We'll still have lower value. So any acceptance back into B and M on that second short, I'm out. On the flip side, if we open and drive down, maybe just initially, I'll take a call play to see if they front run the overnight low, if this is what it is. Again, there's 75 minutes to go prior to the opening. But if this is the overnight low, I'll see if they front run the overnight low and defend the bottom of a 2-day balance. If you take that play, then again, you can see if it comes back up and you decide where you want to get out if there's a gap, right? If it's a large gap, I wouldn't expect it to get filled right away. So if this does go back up, it's more a case of defending a balance low, front running an overnight low, and getting an inventory adjustment because obviously this market's short. If you take that call play and you get any acceptance below Wednesday's low, get out of the trade, because then for sure they will beeline for the 50-day moving average, which is probably, well, I'll get to it in a minute, but probably close to $2 away or $1.50. Now, let's go to the charts. A lot changed yesterday afternoon. So monthly. I said last night, the monthly is very healthy. We're above last month's high. You'd like to stay above it. Well, guess what? Right now, we're right at last month's high. Last month's high was 374.66. We're trading at 374.58. Now, is it a disaster if we trade inside last month's range? Of course not. But I think it would be a lot nicer for the bulls to close above last month's high and see we're getting distance away from previous months. You still want time framing up for 3 months out of an inside month, so it's still healthy. But they would like to close above it. But that's not the important thing. Here's the important thing. On Wednesday, I said we could have an outside week down. Then yesterday morning, I said, wow, it looks like they rejected that, and I don't expect it, but who knows if we have an outside week up. Well, here we are 24 hours later, and now there's a good chance of an outside week down again. So that's very important to me. If we close below last week's low of 376.75, and right now we're $2 below it, pre-market. If you close below there, you'll have an outside week down, which is pretty bearish, inside a 4-week balance. And then I would certainly be looking for the next larger target of the bottom of that 4-week balance, which, believe it or not, will be this month's low of 364.82. So a lot changed yesterday afternoon when the week longs got out, shorts pushed in, and now they're continuing. Now we have all day to trade, so we have to see. But that is certainly an issue for the bulls if we close below 376.65. Now, let's go to the daily. 2-day balance. They attempted, remember yesterday, I took a short against that. The previous all-time high, that 8-day balance, I said, well, that's the thing they want to get above. Did they get above it? Yes. Remember I said D's high? I thought it was going to be the high today. I was wrong for $1. I was wrong for $1, but I'm right for $7 right now. When you look at the big picture, and I'm not a swing trader, and I won't go home with a position, but I was wrong. I was wrong for $1 because it got $1 higher than D's high yesterday. But as of this morning, I'm right for $7. So I'm happy how I saw the market. So a 2-day balance. You come out of it to the downside, that 50-day moving average, which is, I'll give you an exact number, 370.64. Now, it's still almost $4 away. But if we take out Wednesday's low, you're going to go for it. Now, in ES, on a 24-hour basis, they touched their 50-day moving average the other day. But I only use regular trade hours. Obviously, with SPY, that's all we get. So those are the things to look for. Remember, this is the last trading day to get in for $20 a month. Starting Monday, it's $30 per month here at camelbacktrading.org. Good luck trading today. Have a great day. We'll recap the day, the week, all the charts at 4 p.m.